So what are some of the best companies right now to give you some of those sweet dividends? So I'm off to do some research, and the first thing I look for is a high dividend yield. I usually like a dividend yield of over 5%. That's because I invest for the dividend income, so I like a nice high dividend yield. Sometimes I'll go lower than 5%, but for this exercise, we'll only be looking at companies over 5%. But of course, those dividends have to be increasing over time. They have to at least remain consistent in that they're paying out a similar amount each time, but preferably I want them growing as well. That means my income will grow as well over time, which is what you want. Next, I'm going to look at the stock price to make sure the price is increasing. I'm going to look at a time frame of 5 years. 5 years is a good amount of time. 10 years is also great. If you're doing your own research, don't go anything shorter than say 12 months because the market is too volatile. You want to look over the long term to see that the price is increasing. And I'll compare the companies that I have against the ASX 200 just to make sure that they're at least level with the market index, but if we can get them higher, that's even better. I'm going to stick with the ASX 200 because I only usually invest in the top 200 companies within Australia. There's more data, they've been more established for longer. I don't invest in companies that have less than 5 years worth of financial data. So let's put on some music, grab a drink, and go do the research. Let's research. To make things easier on myself, I'm just going to jump into CommSec's stock screener. Although you can grab this list from anywhere, I'm just saving myself some time. So I'm going to click that I want anything that's in the ASX 200 and I want a dividend yield of 5% or more. The slider thing just goes to 4.8%, which is fine. I will fix that up when I put it in my spreadsheet. It takes a little while for it to populate. At least it does on my computer. My computer's probably slow, but it means I don't have to go through it all myself, so that's a bonus. So now that I've got it into a spreadsheet, I can delete all the columns I don't want, which is pretty much all of them except dividend yield, and change the font to something pretty, because how on earth are you meant to use a spreadsheet if you don't have a pretty font? And the other things I'm going to look for is dividend stability, of course, and the 5-year price increase. So I'm going to do 5-year price increase first before I look at dividend stability. That way I can narrow things down even more and cut out things I don't want. Pretty much the way I do stock picking is it's a process of elimination. And the ones that haven't been eliminated are the ones that make the cut. I'm going to fill these in one by one. It shouldn't take too long. Okay, now I've filled it in, and the ASX 200, the past 5-year return has been 24.55%. Let's just look at the ones that are above 24.55%, so above the market average. So all the rest I'm going to grey out, and now these are the ones that I'm going to go and check to make sure that the dividend is stable or not. I'll do this in CommSec. They have a nice graph. It's just an easy visual way for me to see whether the dividends are stable or not. Now with FMG, I can see that the dividends have dropped a bit, so that does give me some concern. I'm going to put yes for stability because it has been stable up until 2022, but it's something to keep an eye on. But yeah, there are going to be far more stable dividends than Fortescue Metals. NHC is another one that's not exactly stable. They've had huge 2022 dividends. I'll put yes for now, but it's something that I would keep in mind because it hasn't shown that consistency over the last few years. But there will be a lot more that are very, very stable. As you can see, Whitehaven is not stable at all. They didn't even pay in 2021. I couldn't consistently use them for dividend income. But here is a nice, stable and growing dividend, something that I love to see. JB Hi-Fi has shown exactly how I want my dividends to look, and that's with growth over the long term. I would actually choose dividend stability over dividend yield as long as it still has a good dividend yield. That's most what I'm looking for. I want those consistent dividends. Centura is another one that has nice, stable, growing dividends. Perfect. APA is another one that has nice, stable, growing dividends. This is what I like to see. So here's my list. Only one of them, Whitehaven, didn't have stable dividends, and others, there's a few that I wasn't quite sure about, but I put yes, although I would keep an eye on them. But the bold ones have not only consistent dividends, but growing dividends. So those are the ones I'm most interested in. But let's go through this list. So we have New Hope with 16.7% dividend yield, which is super high. But like I said, it was a one-off. So I would keep an eye on that. I'm not sure that they'll be able to consistently keep that going. Fortescue Metals, Rio Tinto, BHP Group, JB Hi-Fi, Nine Entertainment, Charter Hall, the Elders Group, South 32, Centura Capital, Super Retail, Eagers Automotive, Atlas Arteria, Metcash, the APA Group, Charter Hall Social, and Spark New Zealand. So now you can go and put these on your watch list and look at them even further. Now don't forget, it's important to do your own research as well. Make sure you're doing that. Remember that all investing is a risk. and wine is optional. Hope you enjoyed this video, and I'll see you in the next video. Bye.